Investment in properties has been the best performing asset class for the last 5 years. And I think it is because of that that insurance industry has seen its commitments to the sector rise from about 23 billion shillings to about 79 billion shillings in 2017, almost 3 times multiple. Between UAP Mutual, Britam and CS Insurance, they hold about 43 billion shillings worth of properties. That is more than 50% of the entire sector holding in real estate. One statistics that really jumps at me is that Jubilee has continued to outperform UAP Mutual, Britam and CIC despite their overweight allocation to investment in properties, or their bet in investment in properties. Jubilee's bet has been in government securities, and that tells me that government securities are delivering better returns than investing in properties. And I think the question to everyone is the investment in properties asset class going to replicate the successes of the past? And we have seen a slowdown in the last 2 years or so. And my own hunch, I feel probably not. I think the days of market exuberance in real estate are probably behind us, and you'll see a little bit more of sanity going forward, a bit of steady growth, but not one that is overhyped. So what will insurance companies that have taken a huge bet on real estate do going forward? The insurance regulator IRA is also presenting another challenge to the insurance sector who are exposed to investing in properties by taking a haircut of 30%, meaning for every 100 shillings that is committed to real estate, there is a 30 shilling that is not counted when they are calculating their risk-based capital. So when I put all these facts together, there is a very high need or pressure for insurance sector to have as liquid balance sheets as possible. And it is for this very challenge that I see an opportunity for insurance sector. I see insurance companies holding the key to unlocking the first and most successful REIT in Kenya. My name is Pius Muchiri Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa. Real estate is going to remain an important asset class for the insurance sector. The only headache for the captains of the industry is how are they going to handle the illiquid nature that comes with real estate. Insurance is all a game of liquidity. And for me, this is why I'm convinced that insurance companies should pool their real estate assets together to form what will probably be the most successful and of largest scale income REIT in the market. Today, insurance companies put together a 79 billion shillings strong in real estate properties, some of the most coveted properties in the country. If put together into a REIT and it is listed, it would be of great appeal to individuals who want to own a piece of prime real estate in the country. And once these individuals are buying the units in the market, it will create an emergent liquidity which is much needed in the insurance sector. On average, it takes about 239 days to dispose of a directly owned property. However, in a REIT situation, it takes about only 3 days for one to sell and receive money in their bank. On the return side, it has also been proven over the last 10 years, indirect ownership of real estate through real estate investment trust has delivered an average of 12.7% return, whereas investment directly in properties has delivered an average return of about 7.8%. So it still makes a lot of sense for insurance companies to form the first REIT in the market, because they'll benefit from higher return and better liquidity. However, there is one small nuance that they need to consider. According to the IRA regulations, It seems that there is no differentiation between directly owning real estate and owning it through a real estate investment trust. You still get a haircut of 30%. And I think this is an opportunity for insurance captains to engage and lobby with the regulator so that an income REIT can be considered to be as liquid as any other listed security in the stock exchange. To actualize this great opportunity, industry captains and the insurance companies will need to overcome one huge challenge, and that is who will bring together rivals, competitors to put together what is most likely to be the most formidable income REIT in the market. Nabo Capital is a licensed REIT manager and does not own any stake in any insurance company and would be more than willing to work with you in this journey. Please feel free to engage us to discuss on this particular subject. Thank you for watching. My name is Pius Muchiri Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa.